Thursday, February 20th, 2014, current time 10:52 GMT. Jay Meisel here with the daily Forex trading outlook from GVI Forex on globalview.com. Before I start, I suggest staying tuned to the end of this video, as I'll be discussing Fed tapering and the implications of yesterday's minutes. Now, we start off today, and the euro-dollar has now flipped from one of the strongest to one of the weakest. On the board, the French PMI came out weak, and that cut the legs out of the euro and showed you how hypersensitive the market is to economic data and surprises in the data. If you look at my video from yesterday, I pointed out the euro would eventually come under some pressure, defensive pressure, ahead of the ECB meeting, but that's really 2 weeks off. But some sort of monetary easing is back on the table, and that risk should at least put a limit on the euro-dollar upside. Now, if you look at charts, on a daily chart, we're clinging to this trend line, which I show around 136.78, and you got this cluster of moving averages of 50, 20, and 100, between 136.18 to 40, in a market that has been rallying for 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 2 weeks now. And that episode seems to at least be over for now, but have to take out 137.75 for this to accelerate back to the upside, and that seems like a reach in the current environment, especially with the ECB meeting now on the market's radar. If you look at the 4-hour chart, you had a breakdown through yesterday's low. Well, actually, you can look on the 1-hour chart. That might be easier. Look at the 1-hour chart. We had a breakdown through yesterday's low, which right here was 137.24, and a subsequent set of lows around 137.28. So really 120. Let's make it 137.25 to 30 is the resistance right now, and level that needs to hold to keep the pressure on the downside above 137.25 to 30. Let's say the focus just back to 137.50. And as those who know how I look at the market, when you trade between the 50 levels, currently 136.50, 137.50, 137 will eventually become the bias setter. Market's battling it around it right now, but unlike yesterday when it was battling 137.50, 137 gives it a softer tone. I said it lows below 137.25 to 30. Now we look at what's coming out today. We have U.S. CPI and the Philly Fed index, with the Fed thinking about the economy and dismissing the weakness we've had to weather-related weakness in something like the Philly Fed, although might have a reaction, should be kind of dismissed. Now let's talk about Fed tapering, and then we'll sum up the market for today. I don't know why the market reacts to events like that. Fed minutes yesterday, it was as expected. I don't know anybody should be surprised if Fed set the bar very high for tapering. Just watch any Fed speaker, hawk a dove recently. They're committed to cutting down their bond purchases and wanting them down this year. It's like they're operating with their glass half full, where in the past they were talking about the glass half empty, and half full means that they expect the economy to be growing enough that they can wind down their purchases. So I don't know why anybody reacted, except maybe the algos are running the asylum, and we just got to get used to that, because market reacts even to something like that yesterday when it really should have done nothing. Otherwise, for today, as I said, in the euro-dollar, watch 137. That's going to set the tone. If you're looking for a key level here, it would be the trend line, because there's nothing here until we get down to around 130. I think it's 135.62 is the key level here, and you got this cluster of moving averages here. So 137 stays the focus, and we got that trend line around 136.78. If it's broken, it would just confirm what I already suspect that this market is out of steam. That's it for now. Okay, one other thing, by the way. If you look at the bottom of this video, you will see a link, and it's a clickable link for an article I wrote, How to Avoid the Forex Death Spiral. If you're interested in trading Forex and you want to survive in this market, this is a must-read article. Access is free. Just click on this link.